Right now, though, we're talking custodial banking, which is undergoing a profound transformation. As digital assets gain traction, the traditional custodian is evolving into a strategic partner and an enabler of innovation.
They're modernising the back office to unlock efficiencies, support new asset growth, and navigate the complexities of digitisation and decentralised finance. And to look at just how data is becoming the engine of growth and other questions, we are joined now by Donna Milrod, who's Executive Vice President and Chief Product Officer over at State Street. Welcome.
Thank you so much. It's great to be here.
A simple question to kick things off. What does it really mean to be a custodian in 2025, especially as the financial services industry evolves at lightning speed?
Well, thanks so much for that question, and it's really lovely to be here. And there are thousands of people out there. It's pretty incredible. But to be a custodian in 2025, really, it's about what we do best, which is really offering safe and secure asset protection, and we do that at scale. And we've always done that, and we will continue to do that through this digital transformation. And what you see happening now for our clients and kind of the infrastructure altogether is this whole notion of really helping through this transition as we move from traditional finance to digital finance. And it's up to kind of custodians really to provide that interoperability and help guide our clients through this transition phase.
Now, Donna, one of the key themes at Sibos this year is the convergence of DeFi and TradFi. So can you unpack for us the convergence from your perspective as Chief Product Officer and explain the dynamics that we're seeing in the market right now?
Yeah. So look, traditional finance is really about scale, centralization, and protection, and doing things where we safeguard assets. So that means like segregation of accounts and all of that. Digital finance is really a question of access, and really how do you enable all of this new technology and do that and really get the advantages of what DeFi can bring. So that's tokenization, it's fractionalization, it's 24/7 trading, and much tapping other pools of liquidity. So how do you kind of merge these two things together? Because even with DeFi, you introduce new risks, and that could be risks of fragmentation, which is the one thing that we don't want to see happen. The finance industry is really good about creating fragmentation, and then people spend their careers trying to put everything back together again. So how do you take the benefits of TradFi and the benefits of DeFi and bring them together? And I think that's where we try to partner with our clients in the ecosystem to really make that happen.
Now, Donna, I take it now the next step is to look at exactly how standards and rules can support this transformation. In your view, what types of regulatory clarity do you think would help to accelerate tokenization and the adoption of digital assets?
Well, clarity would be helpful. And I think interoperability, rules around interoperability and frameworks to make that happen. Again, as per the prior question, like TradFi, DeFi, well, they have to interoperate. We're going to have these rails side by side for a long time. We've done a lot of research about this. We talk to our clients all the time. And, basically around 50% of our client base, some of the largest asset managers and asset owners in the world believe that these dual rails will exist for some time, for decades to come. So it's really important that the regulatory standards are acknowledge this cross-border capital flows, and you have to basically have a framework that you can work within. And then I'd say a level playing field is really important. You have new players in the market that's exceptional for innovation, all these new fintechs that are coming in, both banks and non-banks who are providing these services. But if there's not a level playing field, capital will move to the place where they can, most easily get things done. So we're really focused on helping to talk to the industry and regulators about setting standards and also building this framework for interoperability and level playing field.
Now, as digital assets reshape our industry, the role of data is, of course, front and center. So how are custodians using data to modernize back office operations and deliver strategic value?
Yeah. So we've been on this journey for a really long time. Data is really the backbone of everything we do, so you can't really deliver scale without it. So we've been integrating back office and middle office data for a long time. It allows ourselves not only to kind of to provide the operational support for clients to, access that kind of scalability, but also it gives clients insights, different kind of insights for them to do their own product creation, how they think about data as a strategic value add for themselves. So there's a really big role for data as the backbone of what we're talking about. And then if you think about the new technologies that are coming in, both distributed ledger as well as AI, if you don't have kind of standards, kind of cleansed, standardized data captured, kind of at source, golden source, you really can't take advantage of those technologies.
If we take a look ahead, what opportunities in data, technology, or market structure are you most excited about?
Well, definitely distributed ledger. I just think tokenization and the blockchain is really going to revolutionize the way finance happens around the world. And I think that tokenization will provide new ways of investing, new distribution opportunities for clients, and I think that AI is the obvious other big technology. I know we're talking about a lot about that at Sibos this week, and but again, like with all of that comes new risks. So how do you do that at scale and very carefully, very carefully?
And Donna, talking about these risks, what are the risks that we're not talking about enough in the digital asset space?
I mentioned it already, but I would say it again, fragmentation. The biggest, I think, risk that we have is, there's already many different distributed ledgers out there, and making sure that they can interoperate. But if we create more fragmentation about the protocols that we have, with lack of standards, we're just going to spend people will spend careers kind of figuring out how to kind of bring that all back together again. So I'd say that's kind of risk number one from my perspective. We haven't figured out many of the novel risks that blockchain brings to us as a kind of a big systemically important bank. We care a lot about a permissionless environment, like how do you really create audit trails and things like that for our clients, the provenance of asset ownership and how you safeguard assets. And then I'd say lastly is probably the regulatory risk that we just talked about. Any kind of fragmentation on the regulatory environment is also not good. It's not good for investors, and it's not good for the capital markets.
Well, Donna, it's been wonderful to have you here at the start of Sibos 2025. Thanks for joining us here on Sibos TV. I hope you enjoy the next few days here in Frankfurt. That's Donna Milrod, Executive Vice President and Chief Product Officer at State Street.